What's going on, everybody? Welcome to a capital hungry market analysis and trade ideas on the trading pair GBPUSD. We're just going to be going from the higher time frames to the intraday time frames, breaking down fundamentals, technicals such as market structure, price action, key price points of interest, and market psychology, understanding current market conditions and sentiment. Now, looking here on GBPUSD on the daily, we all understood why during 2022, GBPUSD was so bearish, as the Federal Reserve did their most aggressive rate hike cycle in history, starting the dollar domination phase. Now, what we have seen from 2023 onward is GBPUSD respecting higher time frame bullish structure. The reason GBPUSD has been so bullish since the start of 2023 on weak US dollar is due to declining inflation reports feeding into the Fed pivot prayer narrative, weakening US economic data, which leads to less demand in the US dollar as the world reserve currency, majority of the aggressive Fed rate hikes being priced in during the 2022 period, no new hawkish events from Fed speakers or from the actual FOMC meetings, the markets pricing in less tightening of financial conditions, as well as the markets pricing in future US rate cuts based on these catalysts shared here. Now, GBPUSD can obviously have some very aggressive reversals and bearish legs to the downside. But right now, you can see that we have been in a consolidation for weeks as major fundamental events have been priced in. We haven't had any new reactive events. We've had mixed economic data and overall less volume and volatility. From a psychological retail trading perspective, the way we should be attacking these market conditions versus a trending market should be completely night and day different. As we can identify this indecision zone in consolidation, we should be a lot more selective and patient with our trades and not as aggressive or looking to scale in compared to when we have clean trends confirmed by price action, market structure, market sentiment, and fundamentals. Dollar has been more mixed. Equities have been ranging, volatility index ranging, gold ranging. We're seeing that less volume and volatility across the board. Now, understanding current price points of interest, for me to see sells on GU from current areas, we would need more optimistic US data, higher PCE inflation data, and both of these would lead to more dollar strength and dollar breaking above 102.5. I would also need bearish candle closures on the intraday and higher time frame on GU below 1.23 to see deeper legs down and sells to 1.20. If we don't get these confirms, more than likely we're going to continue to bounce around in range here and can still even be trending more bullish all the way up into higher risk, higher reward sell area at 1.26. Some key price points of interest I'm looking at on GBPUSD include range lows at 1.23, range highs here on the intraday at roughly 1.25, and of course, a higher time frame, high risk sell side area at 1.265. As long as we're still above this range, I still see buyers in play, dollar weakness, and us bouncing around here. I also see further upside if we break above 2.5, going up to 265 before looking for some high risk, high reward sells. I would only see continuation sells with the confirmations given here, just looking at the daily. Zooming in more, looking at market structure and price action, we're still maintaining this bullish sequence of events. We're still holding above previous significant highs. You can see we've just been in a consolidation and accumulation area here, not breaking significant highs or lows. I would need that dollar strength induced by optimistic data or higher inflation figures, leading to the markets pricing in more tightening of financial conditions and breaks below here to sell. Otherwise, I'm still in a bullish bias above these range highs and above the key levels, going to 265 before starting to see the major sell-off. Keeping in mind what economic data we have in focus, tomorrow, we just have durable goods reporting during the North American trading session. If this durable goods sees this optimistic rebound, that can bring some dollar strength to trade us above 102.5 and lead to GU sells below this area at 2.3 and 2.35. If we don't get those confirms, we're not going to be looking for sells. We're still going to be looking for bounce buys, understanding we could still trend higher, revisiting those higher time frame price points of interest. Looking at the intraday, overall, just been ranging, but I'm still bullish above these price points at 235. Would only see sells below there with confirms of more optimistic US data and dollar trading above 102.5. Bringing that information together to the table, this is my adapted secondary bias, but also very great trades to take advantage of with the correlated confirms that we were just talking about. Dollar above 102.5 and trending higher. Strong US economic data. Higher US inflation. GU break below 1.236 and 1.233. Adapted bias, but my main bias I'm still looking for, as dollar's still holding below 102, equities are still holding bullish. We don't have any new fear, uncertainty, or doubt. We're still having the Fed pivot prayers narrative holding weight from the declining US inflation reports. We've just been in this indecision area with a lot of aggressive intraday ranging. I would still be looking for these main bias buys. And those high risk sells up into the 2.6 area. Now, keep in mind, as a manual retail trader, as we still have mixed fundamentals, don't have one-sided volatility, we don't have high volume and volatility, we're seeing some intraday ranging and consolidations on different asset classes across the market. Stay adaptive and take some quick jabs at the market as a scalper or day trader. Don't marry any trades until we have the fundamentals and technicals to support that. All right, everybody. Nice little fundamental, technical, and educational breakdown on GBPUSD, daily time frame to the intraday time frame, some trade ideas breaking down fundamentals, intermarket correlations, economic events, price points of interest, and price action. Stay adaptive to the current market conditions and understand, don't think the market will adapt to you. You have to adapt to the market.